Hey everyone, welcome back to Corporate Decoder, where we translate corporate mumbo jumbo into stuff you can actually understand, because let's face it, those filings can be drier than week old toast. Today we're cracking open a filing from NewHold's Investment Corp 3. And spoiler alert, it's a bit of a whoops we goofed situation involving their auditor. The headline here is that NewHold's Investment Corp 3, which is a special purpose acquisition company or SPAC, had a slight hiccup with their initial public offering paperwork. Basically, they needed to fix something in their auditor's report. It's like accidentally putting the wrong date on a permission slip. Not the end of the world, but needs fixing. This whole thing started with a Form 8K con, which is like a correction note companies have to file with the SEC when they mess up the first time. Think of it as the corporate equivalent of my bad. Originally, NewHold filed something saying they closed their initial public offering, their IPO, which is how they raised money by selling shares to the public. That was back in March. The original report had some numbers as of early March. It was all about how much money they raised from the IPO and a related private placement. Basically, they were showing off their shiny new pile of cash. Now the problem, it was in the auditor's report. That's the opinion from the accounting firm that checks if the numbers are legit. The issue was the name of the company was wrong in that report. Someone probably copy-pasted from a template and forgot to change the name. Whoops. They're saying that the text is identical from the previous form, but here we go. They do give you the original press release that the initial IPO of the company was for about 20 million shares. The shares were going for about $10 a share. It looks like they sold about 20 million units at $10 a pop, which is pretty standard for a SPAC. A unit is usually a share plus a fraction of a warrant, which gives you the option to buy more shares later. Each of these units comes with one Class A ordinary share, which is just fancy talk for regular stock, and half a warrant. Warrants are like coupons that let you buy more stock at a set price down the road. Along with selling to the public, the company also did a private placement with some insiders, the sponsor, and BTIG LLC. They're basically selling more stock to some initial investors. BTIG LLC got a small piece as well for helping the company go public. It is very common practice to have the banker get a piece of the transaction. So bottom line is that NewHold's got about $22 million in the bank. That's what this is all about. That cash is sitting in a trust account managed by Continental Stock Transfer. It's basically like a corporate piggy bank waiting to be used for an acquisition. That whole thing is being presented their official balance sheet as Exhibit 99.1. The exhibits are simply the audited balance sheets from March 3, 2025. And this was signed off by Polly Schneck, the Chief Executive Officer. Polly is basically saying that this is the formal requirement of the Securities Exchange. Add to now NewHold is what's called a SPAC, or Special Purpose Acquisition Company. Think of them as a blank check company. They raise money in an IPO with the sole purpose of buying another company. It's like going to a store with a gift card, but you don't know what you're going to buy yet. SPACs have been super popular over the past few years, but they've also gotten a lot of scrutiny because some of them have been, well, let's just say not all of them have found great companies to buy. So what does this filing tell us? Honestly, the error itself isn't a huge deal. Typos happen. The bigger picture is that NewHold has a couple of $100 million sitting in the bank, and they're on the clock to find a company to merge with. If they don't find a good deal within a certain time frame, they have to give the money back to investors. That's one of the upsides to investing in a SPAC, because you get some downside protection. The tone of the filing is pretty standard, very formal and by the book. It's not like they're trying to hide anything, they're just correcting a minor error. However, what they don't say is just as important. There's no mention of what kind of company they're looking to acquire, what industries they're interested in, or what their strategy is for finding a good deal. That's all still a big mystery. This whole SPAC thing is about looking at the balance sheet and thinking what is important. They have about $200 million in the bank to acquire a company. What company is that going to be? How are they going to get a good deal? Are they going to be able to get a good deal? Are they going to be able to get a good deal with the way the market is moving? For investors, the takeaway is that NewHold is a SPAC with money to spend. Whether they can find a worthwhile target and create value for shareholders is the big question. Keep an eye on their future filings for clues about their acquisition plans. And remember that investing in SPACs is inherently risky because you're betting on management's ability to find a good deal. It's really a blind investment. Thanks for tuning in to Corporate Decoder. If you enjoyed this deep dive and want to see more plain English explanations of SEC filings, hit that like button and subscribe. And let me know in the comments what company you want me to decode next. Until then, stay informed, stay skeptical, and keep following the money.